Hi guys, this is Rahul, and we will begin with the analysis of the last week's movement and try to understand what we can expect with this week. But before getting into that, what I've been noticing is that during these volatile markets, a lot of our students are making common mistakes. Now, what is happening is there are a couple of patterns which I see, and not just my own students, a lot of people who are stuck with these same patterns. All right. What's happening is people are making money, but because of these mistakes, the losses are much more than the profits. So we'll try to understand what these mistakes are and how to avoid them before getting into the regular weekly analysis. So let's see what these common mistakes are. Now there are three primary mistakes that I've identified which cause for the maximum losses being given back, maximum profit being given back into the market in terms of losses. All right. So let's start with the first one, which is news trading. Now, since the markets are so volatile and there is this pandemic across the world, what's happening is markets are definitely in the news. You can see major falls in the market, and every single day we have news readers giving their analysis. We have people talking about the markets. Now, one common pattern that has come out and which most people share, especially people who do not have much of an idea about markets, is bottom fishing. People are saying that this is a very good time to buy because everything is falling. So let's go ahead and take a buy because we won't get such low prices ever again, right? People are saying, news people are saying that market is only doing a correction. It should go back up anytime now. All right. So let me show you what happens when you actually try to jump in and look for these bottoms when they're not really there. Now, what we see here is the Yes Bank chart. All right, and as you see, this is a chart which is all the way from Jan 2019 till date. Now, when we see last year markets were going up, and sometime in April we had this fall, then a gap down and a major fall. Right, price reached the previous support. This was being called as a bottom. So people go in and buy. People started to buy, and you can see it made a new bottom just a month later. Another bottom in June. So this was May, this was April, this was May, this was June. Then we see new bottom again in July and then August. Sorry, August. We are all the way down to 53. Where we actually started from was somewhere about 300. We have a new bottom in October last year, and then market went sideways. But we never could find the bottom. All right. So what I'm trying to say is I'm not against buying at the bottom, but the point is predicting the bottom is one of the worst things that a trader can do. What we need to do is we need to understand when the market has given us a confirmation that the bottom has been formed, which will only happen after it starts to move up a little bit. Then there will be a pullback, and that's when you can enter. So don't be in a hurry to enter because this definitely is not a bottom for 90% of the markets. All right, the pandemic is still on. We will see new lows again. Definitely, it's important that we need to be patient enough to get a confirmation before actually jumping in, expecting the market to be at the bottom. Also, this is definitely not a correction. If you take a look at Nifty, we can see the chart. Price has fallen vertically, but I would not call this a correction. I would say this is a change of trend. The trend has reversed into a downtrend. All right. Let's look at the other mistakes that people make. Overtrading, fear of missing out. Now, what really happens is that since the markets are moving so much, and we are hearing a lot of people saying that they shorted the market, they made money, a lot of traders have this fear that if they do not take a lot of trades, they will miss out on the moves. So what this does is that you may end up making a good profit in the morning, but because you're trading too much and you cannot control yourself, you will end up giving the profit back into the market by the end of the day. Now, most people are going through this exact same thing. The trick to this is that we stick to our strategy. We only take the trade when our strategy gives us a signal. Other than that, we keep waiting. We be patient and observe the market, looking at the best entry and exit levels. But that's not what is happening. Overtrading is one of the biggest mistakes that we see, especially in beginner traders and even with experienced traders during times like these. So what we see here, this is the Nifty 15-minute chart. Okay, what you see here, let's see the size of the candles. Now, this one particular candle on 13th of March at 9:15. This is about 1500 points. All right, and apart from this, if you look at overall the size of the candles, it's much more compared to the previous moves when the markets were not as volatile. You can see the candles are much smaller here, but the size starts to increase. Now this again gets people very excited, and they start to overtrade, thinking that they can make much more. But what happens is they are generally trading only to recover their losses, and even not that's not even happening either. All right, so overtrading is one more deadly mistake that people make, especially during times like these. Now let's look at the third one. The third common mistake, which is managing risk, not managing it properly, not managing the risk properly, either overexposing your trades or underexposing it. Now, it's quite obvious why this is happening. This is happening because of greed or because of fear. Coming back onto the same chart, like we were just discussing, we can see the size of these candles are bigger, which also means the swings have become bigger. So if you are taking, let's say, going short here, your stop loss would be somewhere here. So this would be about 1% or about 150 points. All right. So ideally, what we need to be doing is we need to go with a smaller volume because our stop loss has increased. That's the rule of risk management. All right. But what I see is that a lot of people, they do not really bother with how big the stop loss is. They still go with their standard volume, which could be maybe 5 lots, maybe 10 lots, basically much more than they should be doing. Whereas in this case, it should be going with a lesser volume. Now that's one part of it. The second part of it is because some people are really scared that they might lose money, they are going with much lesser volume. So where normally they would be trading with about 8 or 10 lots, they are now going with just about 1 lot. All right. So both cases are bad. What we need to do is, no matter how different the market scenario is, whether it is volatile or it is consolidating, the idea is we need to stick to our regular risk. It may be 1%, it may be 2%, it may be 0.5%, depending on each of us, but the risk should not change. All right. So just to recap, we are overtrading, we are taking more risk, we are depending on the news and trading according to the news. These things have to be avoided. The simple answer to this is stick to your strategy, stick to your risk management rules, and keep your psychology under control. All right. Now let's begin with the analysis for this week, starting with Nifty and then ending with Bank Nifty. We are not getting into the stocks as of now because they are just mirroring the indexes. All right. So let's resume with our weekly analysis. This is the weekly chart that we see here of Nifty. And you can see the fall started from 24th of Feb. This last week has been a bullish candle. I understand it's a bullish candle, but I would definitely not be looking at a buy because of certain reasons. First of all, this candle is not a change of trend. Second thing is this is an indecision candle, all right? And although it has found it as support, but I look at it only as a bounce up before the market can resume its downward trend, all right? The bounce may be a little more, so we'll see how much we can expect the market to retrace. But I'm looking at this only as a retracement and definitely not a change of trend. So I would not say this is a bottom. What I'm expecting is the market to retest the low before confirming this to be the bottom. So at least a double bottom before we see this to be a low, or we could be seeing new lows. So the next level of retracement, we have already seen 23.6%. The chances are that we have a gap down tomorrow and market continues to fall with a new low. If it does go up, 9,405 is the next resistance. So let's see how we can actually trade this week. All right. What you have to understand is the previous swing has been broken. So if I were to look at this as an uptrend, what I would be expecting is that the market goes and breaks this swing as this is the next swing, right? Now, either that or a more practical scenario would be where we are looking at new swings being formed. So the market goes up, makes a swing, then come back down and breaks the swing. Now, when this swing is broken, that's when I would be confident that we are now back in the uptrend. All right. So as of now, we're looking at a downward move on Nifty and Bank Nifty. Now, how do we trade this is, what I would be doing is I would be waiting for the market to reach either the 9,400 levels, or even if it does go sideways, as soon as I see a consolidation on the lower time frame, which is basically my 15-minute chart, when this consolidation break, this or a new one, I would go for a short. So I'd be looking to short after every pullback and then a breakout, a breakdown of the consolidation on the lower time frames, right? Stop losses being just above the range. So look for range breakouts on the downside, and that would be the strategy for the week. Wait for the pullback on the upside and short with downward range breakouts. Do not buy. Yes, you can capture this pullback, but it is risky because the markets are in a strong momentum on the downside. That's the view on Nifty for this week. Bank Nifty has similar view, but we will just check the Fibonacci level. So you can see similar candlestick being formed in Bank Nifty, again indecision. So the green does not really make a difference here, although it has formed at the support with a rejection, because if we jump into the daily time frame, you can see what happened on Friday. Same candle is formed on Nifty as well. We had a gap up opening and then closing as a bearish candle, indicating the momentum is still on the downside. Market just did a profit booking or a small retracement. All right, so same view for Nifty again this week. What I'm expecting is that the market should continue its downward move. There might be spikes on the upside. We can be seeing the next retracement level of 38% on the weekly chart of both Nifty and Bank Nifty. But patience is the name of the game right now. You need to wait for the market to settle a little bit, go sideways, and then break on the downward side to capture the moves. Stick to the intraday trades. If you are holding overnight, try to exit at the opening time because the momentum is high during those times. I would suggest not to buy. Rest is up to you. All right. Before we end, I have a couple of announcements to make. We are having an online refresher session for all our old students where we will be revising all the strategies all over again. This is a free session. This is being held tomorrow evening. So if you haven't yet logged in and got the information about it, I'm sharing it here on the YouTube channel. It has already been shared on the Telegram group, so please come and be part of it. Second thing is we have moved on to online training in the form of live webinars where we're having a live interaction. You can see my screen, I can see your screen, we can hear each other. So it's just like a virtual classroom. So people outside India, people in different parts of the city, of the country, except Bangalore, who haven't been able to come down to take up the class, you may opt in for a demo session and see whether you'd like to be part of it. All right. Other than that, there are a couple of internal updates which I'll be sharing tomorrow in the refresher course. That's it for now, guys. Thank you all for joining and see you soon. Bye-bye.